Hello guys, good day. You're welcome to my YouTube channel. Today's training is going to be on how to insert tax item on bill received from your supplier. So most of the time we buy goods from our supplier and they are VAT inclusive. So over here to Microsoft Word, I have an illustration and I want us to understand how to apply them. So the question is ABD Company Limited received a bid from her supplier for service enjoyed for 29,000 inclusive of VAT. That is, the VAT is 4,000. Actual cost of service is 25,000. Now there are two scenarios. The first scenario is recoverable VAT. Are you recovering this VAT back, this 4,000 from the government or not? So the second option here is non-recoverable VAT. So you can take time to go around. See, the entries for this phase is to debit VAT receivable, debit purchase cost of goods sold, credit payable. In a nutshell, you are debiting VAT receivable is like an asset to you because you have a claim over it with the government. Though government might not pay you cash, but there is a way you can also recover it by netting off your output VAT that you are supposed to pay to the government. So you look at your input and your output VAT to recover this amount that you've paid initially for purchases. You understand? Well, I will show us an example. Now, with the tax amount, now you are debiting purchase the cost of goods sold with the net amount. That is with 25,000. So this time around, your actual cost of goods sold is 25,000. Then the payable, which is the supplier, you are paying the supplier the total bill amount, which is 29,000. In the case of non-recoverable VAT, you are not uh, you are not trying to recover it from tax authority or from government. So in that case, you are going to include it to your cost of goods sold so that you can have an accurate cost of goods sold so that you know how much you are going to add as a margin, as a markup to give you a selling price. Then you also credit the payable with the total bill amount. So you can see there are two different scenarios. So let's start. So first of all, we receive a bill. Now remember, if you are receiving a bill, it means you are not paying instantly. So you go to enter bill. But if you are paying instantly, you come to write check here over here, or go to banking and write check. Or you can also make use of a check register to just do some, or yeah, check register. So now the first option here. So but if you are buying on credit, you go to enter bill. Then once you want to now pay for that bill you enter, you come to pay bill. Don't go to write check again. So but don't worry, we understand as I have other videos to explain this. Okay, now let's enter the bill. So we've received the bill. So we're entering the bill. Who do we receive the bill from? We are receiving from DBS company, our vendor. Okay, today's date is 15th of January 2023, which is also correct. Reference number, the bill you are receiving, if it has a number or invoice number, so you can include that here. So let's say invoice 11254. Okay, then the bill due date, let's say the bill is due by 10 days, as you can see, or it's still due on that day you receive it or 2 days after, depend on the agreement. Okay, that's the due date. Then terms here. Okay, let's just go ahead with the now. I'm receiving an item, ceiling fan. Okay, I'm receiving ceiling fan, and the cost of ceiling fan coming to this place, they will not specify. Okay, we say service, right? Okay, let's edit that. uh ceiling ceiling fan. Okay, my spelling. mm, okay, uh okay, received from our supplier. Okay, let me just use purchase of ceiling fan. Okay, I think it's better this way. So then for how much, let's go back. For we are using two methods recoverable, so we are using the first method, the recoverable VAT. Okay, so now we'll go back to QuickBook. So the amount here now we are going to make use of is the the tax amount. We are going to debit VAT receivable tax amount, debit purchase cost of goods sold net amount, now credit payables total bill amount. So okay, now as you come to this place, since you know that you are going to recover, so here we are going to make use of 25,000 naira. Okay, 25,000, which is that. Okay, then the input VAT. Now I created input VAT as other charge. So if you go to list, item list, you see input VAT, which is this. Right click and edit to see how I created it. So I created other charge, then input VAT, then the account selected is an other asset account. I created an other asset account and name it input VAT recoverable. Is an asset because we are planning on recovering that amount back, either to net off. Definitely government will not pay you cash, so we are using it to net off the output VAT that we might be paying in the future. Okay, so that is that. I just want to show us how I created the item. So now the amount now is 4,000. Okay, so I did the same thing for, because the question the asked was for input two VAT, input VAT and withholding VAT, according to Asman Khan. So, but now we can also use that same similar method and select withholding. So, but in this case, okay, no problem. Let me use withholding, but I'm not going to deal with withholding that much. I'm just going to deal with VAT. Okay. Okay, no. It's not in our question, so let me don't confuse the illustration. Okay, let's just leave that. But the same method you apply for that one. Okay. Now total VAT is total bill is 29,000. Yes, on DBS. Now you can see credited bill with 29,000. That is DBS according to our illustration here. Okay. Then debited the purchase, which is ceiling fan, by the net amount, which is correct. Okay. Then also debit the input VAT recoverable by the tax amount, which is 4,000, which is also correct. Okay, this is bill, total bill. So we can see we are done with recoverable VAT. So from this end, save and close. Now before we forge ahead, I want to show us the report. So let's go to reports, company and financial, then profit and loss. You see from this end, okay, sorry, we've not sold. Okay, we did not sell anything. So let's go to company and financial balance sheets. It is only when we sell that we see a report on profit and loss. So for now, we use the balance sheet. Mind you, you can still adjust this name and customize the report and edit the name to financial position. Okay. For now, this is the input VAT recoverable is 4,000. Account payable is 29,000. Now you can see the inventory asset is 25,000. Correct. This is how we want it because we are recovering back this 4,000. So we are not including it on the cost of the item. But whichever way, we are paying the 29,000 to our supplier. So you can see from this end, we're able to pull out input VAT recoverable. So now, let me create an illustration. I want to sell. Okay, let's go back to the bill. Okay, we'll go back this way. So let me select a quantity. I select, let me say 10. Okay, then I recalculate so that this 29,000 will adjust. Okay, sorry, we made use of 29,000. So let me just say 1. 1 is okay. Yeah, 29,000. So let's leave it that way. So if you've made a correction on a bill and you don't want to save that correction, you can just revert. Then you exit. Reverting means you should undo the changes that you've applied. So coming to balance sheet is still as it is. 25 for 29. Okay. Now let's go to the second method here, which is non-recoverable VAT. So, but before we go there, I want to show us how to recover this VAT. So now we'll create an invoice when we are selling on credit. Selling on credit. Okay, now we are in invoice. So I want to sell this fan to ABC company. Definitely one. I only bought one, so I only have one. So I select selling fan. Now the selling price, since the cost price is 25,000, so selling price can be 26,500. Okay, 26,500. Okay, now we have 26,500. Okay, now the output VAT, the VAT, which is the 6 tax item here. Okay, okay, non-taxable. Let's say we taxable. We give out VAT of 16.5. Okay, this is the VAT amount. That is the VAT we charge. That is 16%. Okay, so now 26,000 is now 30,740. Okay, so let's save and close. Okay, now when you go to report, now we can generate the profit and loss. Okay, now you see we have the sales price is 26,500. The cost price is 25,000. The gross profit now is 1,500. Now you see the tax value is not included here. So now let's go to balance sheet and refresh. So we see how much is it. So you see we have a current liability 6 tax payable of 4,240. We also have input VAT recoverable 4,000. Now I want to recover, instead of paying this 4,240, I want to net off. So I'm going to show to the government, the tax authority, the receipt for this VAT. I'm going to show them the invoice that is inclusive of this VAT, so that what I will pay now is 240 instead of 4,240. I'm going to pay only 240. So, but how do I do that so that my financials, my report will show the correct state of tax? Okay, now we go to journal entry, general journal. Okay, so we select now if you look at the balance sheet properly, we have 2 accounts we want to make use of now: input VAT recoverable and 6 tax payable. Okay, now let's go to general. Input VAT recoverable is an asset, so it's going to come second because we are going to credit it. So other asset, input VAT recoverable. Then sales tax is current liability. So we select which item. Let me see the specific item. Okay, sales tax payable. Okay, I have 2 sales tax there. That's why I'm confused. Okay, we should use sales tax payable. So 4,000 and then 4,000. So this to Federal Inland Revenue Service. Okay, That's I'm selecting the vendor, which is the government that we are making this payment to. So we are assuming we are making this payment by netting off this from our input VAT recoverable. So save and close. Okay. Now we are refreshing our balance sheet. Now you see we no longer have the 4,000 input VAT and the 4,000 sales tax payable. Now the tax payable here is 240. So if you want to now pay uh, government on that, so if you want to pay government on that, you can write check and make payment directly to this account, or you also go to uh, the general journal and credit cash and debit sales tax payable, and it will be out. So this is how you recover that. Now, but you see your 29,000 is still there for the supplier. Okay, quickly let's go to the second option, non-recoverable VAT. Okay, on non-recoverable VAT, we are going to also create an illustration here. Let's go to bill. So we'll create a bill. So I'm using two instances. So go to bill. Okay, we'll select the same company, but this time around we don't have any plan of recovering this. So we select ceiling fan. This time around I'm going to make use of 29,000. So this will be part of the cost of the ceiling fan, both the net and the tax together. So this is how it is. You are done. This all for the transaction. So you save and close. Now let's go to generate our report. Let's go to profit balance sheet. Okay. Now balance sheet here, you see we have account payable of 59,000. That is 29 and 29. You know, it's two illustration okay, which is correct. 29,000. Any other thing remain the same. We've not sold. Any other thing remain the same. You see? Now, from this end, uh, there's no tax payable here. There is no input tax because we are not recovering. So the cost of the item is 29,000. So if you come to report, you go to inventory. So let's go to valuation summary. Okay, so ceiling fan is still 29,000. Okay, now let's sell. If you are selling now, we'll create invoice on credit. Okay, we select ABC company, then we'll select ceiling fan. This time around, we already know that the cost going to report, going to purchases, okay, going to purchases. From this end, you see two ceiling fan. You see, the first ceiling fan is 25,000 exclusive of VAT, while the second ceiling fan is 29,000 inclusive of VAT. Do you understand? So that is why we are having 54,000 as the total cost of acquiring these two items. You understand? So from this end, you can actually know how much you purchase those items. Then you know how much you value. So this is the inventory valuation summary. 29,000. Okay. So from this end, we now creating the invoice now. We use 30,000. Okay. Now we are not recovering it, so non-taxable. We are not recovering this from anybody. So save and close. So let's go to profit and loss. Double click on this 56,500. You see, we sold the first one at 26,500, the second one at 30,000. Okay. The cost of goods sold, let's click on 54,000. You see, the initial cost of goods sold was 25,000, while the second cost of goods sold was 29,000. Hope you guys understand how to go about recording VAT for recoverable VAT and non-recoverable VAT. Okay, if you have any question, please feel free to comment on the ask questions on the comment section. Please subscribe to my YouTube channel and click on notified button so that you get notified whenever I have a new videos uploaded. See you guys. Bye.